What's up, guys? This is Amish, also known as APJ Trading. Welcome to my YouTube channel. This is going to be my first upload to this channel covering risk management and stop losses. I'm going to quickly go over what they are, how to use them to protect positions, tools such as trailing stop losses, and utilizing break-even stop losses. Before we get started, I'm a six-figure funded trader and paid out. I'm going to be referring to stop losses in this video in the context of risk management, right? I'm not talking about breakout entries or using stop orders to enter positions. So really quick, for those that don't know, a breakout entry would be if price is below a high, like it's below this high right now, and you wanted to buy when price crossed above. You would be flat here and then long here. You would have a buy stop at this high to tag you in long. Vice versa, if you wanted to be short below this low, you'd be flat anywhere above, have a sell stop resting here, and when price goes below, you'd be short. That is not how I'm going to be talking about stop orders. I'm only going to be talking about stop orders in the sense that you are currently in a position. Let's say you're long, price is moving down. I could have my stop loss here, and I could have my take profit here. The way you'd utilize a stop loss order in this sense would be you're already long, right? You have a sell stop at this price point in which you're telling the market, if price gets to this price or a tick lower, I would like to exit my position. And you're essentially paying that stop order to, protect your capital, protect your long position, and control your risk. So, for example, if I'm long in this scenario 20 minis, I could put a stop here, put a take profit up here, and this is purely for example purposes. Market just opened Sunday evening, and now so we see I'm up a little bit on this position, just over 0.5 ticks. I could trail my stop to break even to reduce all risk, or I could trail it about 50% now that price has begun going my way, or I could even put it in profit and likely get stopped out here for some profit, right? This is how we utilize stop orders in the market to protect positions. So let me stop out of this real quick. Just keep trailing this. I'm sure it'll get triggered. Boom, there we go, stopped out in profit, right? That's an example of trailing a stop loss. Now if we go into replay mode, just so it's a bit more on demand, just to show you guys, let's say I'm short here, put a stop at this high, put a take profit down here, put a stop up here, let's say I'm short. Fast forward a bit, price is going my direction, boom, boom, boom. Okay, just about break even, and I'm stopped out. So this is an example of utilizing a stop to just control my risk. Now, price could easily keep dumping, and there might be instances where you regret stopping out of a position, but more often than not, you'd be grateful you use a stop. Very introductory and rudimentary video, but just utilizing stop losses to control risk and not be a gambler, right? We are not gamblers, we're traders. We live to trade another day. When you use TradingView, you have tools such as a short position where you can, you saw me using this just now, you can see, what your point risk or your tick risk, whatever you're trading, your pip risk might be, and your reward, your take profit point percentage. Vice versa for a long, you can see the same thing here, risk, reward, and this would be where you'd be placing your stop, just to help you visualize your RR ratio a bit more. Remember guys, this is all a profession of consistency and surviving to trade another day. You don't want to be risking your entire account on one trade, and you don't want to kind of have an open risk on the table in which you don't know what you're risking, you don't know your stop out location. Some people use mental stops. That is not what I do. That is not what I suggest anyone new to trading does. That would essentially just be relying on yourself to put a stop. Stop yourself out of a position if price gets to, let's say, this high. I don't know why anyone would not just place a buy stop there if you're short, but some people prefer to do that. I don't suggest that. Have the discipline to place a stop. It'll prevent a whole spiral of events that might result in a bigger loss than you'd like. Guys, very rudimentary video, but to those new to trading, I hope this was a good introduction to stop losses, trailing stops, and break-even stops. If you found this informative, please leave a like and consider subscribing. Guys, I trade funded accounts with Apex, traderfunding.com, ATF.com. You guys can sign up using the code in the description. They are always running sales, 80% off, usually sometimes 90% off, right? Very low barrier to entry way to start trading. So check it out if you're interested in trading futures, ATF.com. And until next time, see you later.